Welcome to this essential guide on globalization and your money. In today's interconnected world, what happens in one country can directly affect your wallet, your job, and your investments. Understanding how global economies work together is no longer optional, it's a financial necessity. Throughout this video, you'll discover how international trade impacts the prices you pay, the job opportunities available to you, and the ways you can grow your wealth through smart investing. Let's explore how being globally aware can help you make better financial decisions. Globalization is the process where countries become increasingly connected through trade, investment, technology, and cultural exchange. Think of it as the world becoming one giant marketplace where goods, money, and people move more freely across borders. There are three key elements to understand. First, trade of goods, where products manufactured in one country are sold in another. Second, capital flows, which means money and investments moving between nations. And third, labor movement, where workers can seek opportunities in different countries. These three forces work together to create the interconnected global economy we live in today. Globalization has a profound effect on the prices you pay every day. On one hand, it can lower costs significantly. When companies import products from countries with cheaper production costs, those savings often get passed on to you, the consumer. Global competition also forces domestic companies to optimize their pricing to stay competitive. However, there's a flip side. When global supply chains get disrupted by events like natural disasters or geopolitical tensions, you might see sudden price spikes on everyday items. Additionally, exchange rates play a crucial role. When your currency weakens against others, imported goods become more expensive, directly hitting your purchasing power. The impact of globalization on employment is a double-edged sword. On the positive side, globalization creates numerous job opportunities. Export industries expand when they gain access to international markets. Technology and innovation sectors grow as companies compete globally. New service industries develop to support international trade, and there's increased demand for supply chain management professionals. However, globalization also leads to job displacement in certain sectors. Manufacturing jobs often move offshore to countries with lower labor costs. Traditional industries that can't compete globally may decline. Low-skilled jobs are frequently outsourced, and local businesses sometimes struggle against international competition. The key is adapting your skills to thrive in this changing landscape. Understanding trade balance is essential to grasping how globalization affects your economy. The trade balance is simply calculated as exports minus imports. When a country exports more than it imports, it has a trade surplus. This is generally positive because it means the country is selling more to the world than it's buying, which can strengthen the currency and boost the economy. Conversely, when imports exceed exports, there's a trade deficit. This can potentially weaken the currency and affect the overall economic health. Your country's trade balance influences everything from job availability to the strength of your savings and investments. Currency exchange rates are a critical piece of the globalization puzzle that directly affects your money. When your currency is strong, imports become cheaper, making foreign products more affordable for you. However, this makes your country's exports more expensive for foreigners to buy. On the flip side, when your currency is weak, exports become cheaper and more competitive internationally, but imports become more expensive for you. This dynamic affects your daily life in practical ways. International travel costs fluctuate based on exchange rates. The price of imported consumer goods, from electronics to clothing, rises and falls with currency values. Understanding these currency movements helps you time major purchases and plan international activities more effectively. Globalization opens up a world of investment opportunities that were previously unavailable to everyday investors. You can now invest in international stocks, gaining access to companies and emerging markets around the globe. Exchange-traded funds and mutual funds offer diversified portfolios that span multiple countries, reducing your risk. Multinational corporations provide exposure to global revenue streams without the complexity of foreign investing. Foreign bonds offer fixed income opportunities from international markets. Commodities like gold, oil, and agricultural products are traded on global exchanges, giving you another avenue for diversification. And real estate investment trusts allow you to invest in property markets in foreign countries. This global access means you're no longer limited to your home country's economic performance. While global investments offer great opportunities, they also come with unique risks you must understand. Currency risk is significant. Exchange rate fluctuations can completely erode your investment returns. For example, even if your foreign stock gains 10%, a 10% drop in that country's currency could wipe out your gains. Political risk is another major concern. Government policies, political instability, sanctions, trade wars, or even regime changes can dramatically affect market values overnight. Market volatility is amplified globally. Events like pandemics or financial crises spread quickly across borders, creating rapid price swings. Finally, regulatory risk varies by country. Different nations have varying investment rules, including capital controls that limit money movement or foreign ownership restrictions. Being aware of these risks helps you invest more wisely in global markets. Now that you understand the opportunities and risks, let's talk about protecting your money in a globalized world. First, diversification is your best defense. Spread your investments across multiple countries and different asset classes to reduce risk. Second, consider currency hedging. Financial instruments exist that can offset exchange rate fluctuations, protecting your international investments. Third, stay informed. Monitor global economic trends, geopolitical developments, and policy changes that could affect your finances. Fourth, maintain a long-term focus. Avoid panic selling during short-term volatility in global markets. Fifth, seek expert advice. Consult financial advisors who are familiar with international markets and can guide your decisions. Finally, conduct regular risk assessments. Periodically evaluate your exposure to global economic shifts and adjust your strategy accordingly. These strategies will help you navigate the complex world of global finance with confidence. Let's recap the most important lessons from today's video. First, globalization affects prices through complex supply chains and increased competition, both lowering costs and creating potential for price volatility. Second, jobs are both created and displaced by international trade, requiring you to stay adaptable and continuously develop valuable skills. Third, currency exchange rates directly impact your purchasing power, affecting everything from imported goods to international travel. Fourth, global markets offer tremendous investment opportunities, but they also carry unique risks like currency fluctuations and political instability. And fifth, diversification and staying informed are your best tools for protecting your wealth in a globalized economy. The bottom line is simple. Understanding global economics empowers you to make better financial decisions. By staying aware of international trends and their local impacts, you can protect your money and seize opportunities that a globalized world offers. Thank you for watching, and here's to your financial success in our interconnected world.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.